Hi everyone, this is Allie the agent here with you for this week's rendition of Once Upon an Offer. We have Jaja joining us today. You can see what a little love she is as she's swatting at me. Be good for the camera. Just giving all cats a bad rep here. So I wanted to talk about something that is top of mind for my clients right now because of our specific market environment, and it is buying in a rising market. So right now, because of the low inventory environment that we're in and the high demand, particularly in the suburbs, we are experiencing an increase in prices and a very intense increase in competition. So as we are in a rising market, what that means is that the market itself, the buyers and the sellers are defining the market. Really, it's the sellers, the demand, or excuse me, the buyers. The buyer demand is defining the market. And we are not seeing the data of the previous comparable sales catch up quickly enough to the rising market. So for example, when I am working with my buyer clients and we are submitting an offer in a multiple offer situation where we know we're going to have to go over asking, we typically try to do so in an intelligent way. I look at the property as if I were an appraiser, knowing the market environment, and we determine with purpose, intention, and intelligence what price we want to go to make sure that we are preserving the buyer's capital, giving them a good foundation for this investment, and not overpaying. So right now, when I am looking at comparable sales, I know that property that went under agreement, got offers accepted last week, I don't see that price point, and I know that it is higher than what I know the previous sales are, and that's because we don't see that final data number until it actually is closed, which is about a 1 to 2 month lag period depending on the closing time. So this makes it challenging to determine what that price should be when you're making an offer. So what I do is, luckily I'm in a lot of different markets with different buyers, so I have a sense of, did I submit an offer on that property last week with another client? Do I know that agent really well? And we have an idea of what that property price went for, so that we know the market demand is dictating blank for a price. Now, the challenge that can happen with that is that when the property appraises, those appraisal figures might not be in yet. So when you are financing, just a little recap here, after you get your offer accepted, you do your inspection, you get your purchase and sale signed, the bank will issue an appraisal, and an independent appraiser will then determine what the value of the property is. And the bank does this to preserve their own capital in the loan, since they're lending you the majority of the money to make this purchase. So the appraiser has to go by what he sees in the data. And when you call another real estate agent, to find out that price, they can give you maybe a sense, but they really, out of obligation to their client, can't give you the full number. So appraisers have to go by that stale data. So property might not appraise at your price, but that doesn't mean it's not worth that price. We're in a rising market environment, and come 6 months when you can potentially refinance, that data will be in there and should justify your purchase price. Now, appraisers do take into account that there is a multiple offer situation. They know the pace of the market and how it's going up. So that does help. We don't always miss an appraisal, and we try as best as we can not to. But this is starting to happen more and more. and it's because the market is moving faster than the numbers are reflecting. So it's really live data as we are submitting offers. So a couple of things to protect yourself as we're doing it. Of course, work with a buyer's agent, make sure they're helping you not only get the property, but help you manage your risk and return there. Remember that when you buy a property, it is a major asset for you, and you got to think about your hold time and all the different tools that this lends you now that you have this asset. You can take out a home equity line, you're not paying rent, you have tax benefits. So there's a lot more than well, I want to make $100,000 when I sell this. We can't guarantee those things, but we have to look at the total picture. So you want to make sure you're working with an agent who helps you manage your risk and return, helps you determine that price based on what the market is doing right now. And then also that you're working with a loan officer who can help you navigate if the appraisal doesn't come in. And for example, if you're putting more than 5% down, you can restructure your debt. And then wait 6 months, refinance, and get a lower payment. So those are your options, and I would say don't be afraid of buying in this market. People always ask me, when is a good time to buy? Well, it's when you can afford it. It's when you can afford it and when your lifestyle wants it. If you're buying an investment property, that's different, but it's really hard to time the market, and we're not going to go back into the 1970s where you can buy something on Columbia Road in South Boston for $5,000. I wish, but that probably would be a much bigger issue with other things. So don't be afraid of this market. Yes, we're in a rising market. People are still getting their offers accepted. We're gonna have to do a couple rounds of this, but that's totally normal. And when you end up with the right property, you never cry about the ones that are lost. What always happens is what's meant to happen. And I truly believe that for my clients. It's been my own experience buying property, and it's been all of my other clients' experience buying property. So if you have any questions, please let me know. Otherwise, I hope this was really helpful, and I wish you the best of luck. Take care.